What's up, everybody? Thursday morning. Hope you guys are having a great day. Welcome to this edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're going to dive into the markets this morning. So, starting with the S&P. S&P is down 70 this morning. NASDAQ is down 250. So, both markets getting pummeled a little bit after yesterday's Fed announcement. So, we talked yesterday in the DMC about the fact that we just really weren't putting on many trades. It just didn't make a lot of sense. And the reason for that is because look at this movement. In a 15-minute time period, we had this big red candle down, this big green candle up, and then another big red candle down off the 15-minute chart. Off the 1-hour chart, it's very easy to see that this candlestick is simply designed to take out people that were trying to trade at that moment, right? Taking out the breakout traders that were getting long above this high and short below this low. And so part of the reason why we stayed out is for that exact reason. Now, what am I looking at for today? Well, we came down pretty hard in the overnight hours, and which is not overly surprising. I would say that you've got a nice little wick over wick area right here to pay very close attention to, and that number is 3752 by 3762. So if we're able to rally up this morning, that would be a really nice turning point in that wick over wick area right there at a London market open time of the day. And so I think that's a very ideal entry for a potential short to continue to join the big picture downtrend. And yesterday we had, the big move up, but that wasn't enough to really change anything that we were doing. And so I would look for this area right here as a strong reversal point for today. NASDAQ also very similar. We did come down into this region, rallied up off of it. And what I'm looking at for today in the NASDAQ is a very similar area with this wick over wick level created right around the London market open. So that's 11,468 by 11,502 for a potential reversal. So that would mean that we would have to give up some of the losses that we've had so far. And it would be kind of an early morning rally to get us up to that level. But then that's where I would look for the potential reversal going forward. Now, a little bit higher than that, there is a nice little level right up here near the pivot high, not formed at quite the same time of day, not as high quality time of day, but still a decent little entry in that wick over wick area. Remember, we do like to look for those wick over wick zones. The Russell's down 1.95% today. Also has a similar picture as far as a short opportunity, somewhere up above this region in here. So keep an eye on those areas in our equity markets for today. Looking at our energies and metals positions for the day, we talked yesterday about a breakdown in crude oil. So hopefully some of you are able to take advantage of that move, as we did get a pretty strong breakdown. But that breakdown, we've continued to move down, bringing oil back down to 111. And so that little breakdown was a pretty effective move coming into this bottom area right here. Now, this bottom area, if I look at it on a 4-hour chart, we did see the momentum shift. We have come down a little bit. We are sitting right at a decent little area of support, but it's not a quality demand area. And the reason it's not a quality demand area is because this was the origin of the move, which has already been retested by this move up. This is not a great spot to get long. This would be a better opportunity to look for a rally up and an opportunity maybe to get short in the short term, right? Looking at this on a daily chart, we have broken a little bit of this kind of upward trend line that we had established here in crude oil, closed below it, and now we are significantly below it yet again. So I will look a little bit higher at a decent reversal point. Let me go to a 15-minute chart and see what we have in here. Right there, about 113 would be a pretty good reversal point for crude oil, and certainly a good place to look. Now, what this also does, if you are looking at an opportunity, and we've talked a little bit about this in our live trade rooms this week, if you're looking at an opportunity to hedge fuel costs, a lot of people are thinking about that, or talking about, the price of gas is going up, fuel's going up, what am I going to do? I've talked to people that are spending $400 to $500 more a month in in their fuel costs. So how can I hedge that? Well, buying on a pullback is a good way to do that, because as prices have come down a little bit, you can maybe get involved in something like crude oil futures or USO futures, or even some of the energy stocks that give you an opportunity to get back in. Next, looking at gold. So gold, we had a little bit of a level in here. We actually came through that yesterday. The better supply level is still up above us, right in this region here. At 1855 would still be the better opportunity to get short, somewhere up in that area. We do have on the 15-minute chart this level here that was just created. I don't like this high upper wick telling us that the supply is probably a bit higher than this. And so, looking a bit higher, you probably want to come up into this area up in here as a resistance point, and then if we base in front of it for a potential breakout. But other than that, there's really not a whole lot to look at in gold for today. Looking at our euro markets and our bond markets. So the euro, we rallied up yesterday to a euro confirmation short, got a really nice move away. And then the overnights came to the breakdown level and didn't really get a strong breakout. And so are getting a little bit more of an opportunity for that breakout today if you wanted to try the short on the euro. If you want to look to a smaller time frame and take the reversal, don't really have a great level on the reversal, to be quite frank. This area is good, but it's a terrible time of the day. And then this area, we came too close to it and almost got into it. Much better time of the day. I would say that the breakdown below 1.0444 is probably the better way to go. And then the other one that we looked at earlier this week that we're still looking at is the Japanese yen. We had a confirmation short up here. We came close to it without getting in. The second time through, we pierced it. And so we're seeing a little bit of strength actually here in the yen coming through this area of supply and poking right through there. The next area of supply would not be until this area way up in here. So you've really got room for price to run a little bit back to the upside. I'm still, until proven otherwise, I'm still looking at this short as the better opportunity. We're just not anywhere near there at the moment. So, all right, well, that's really all I have for today. If you guys have any questions, as always, shoot us an email, support@tradersarmy.com. Until tomorrow, buddy, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.